Friends, in this video for iThought Advisor, I'm going to talk to you about advisory, a 360-degree view. The last 12 months have been tremendously volatile. We live in times where volatility almost has become a constant. It is in this environment that an investor and an advisor have to interact with each other, engage, evolve, and still work together. If you look at what has bothered people the most at all points in time, it has only been returns. But when you see so much of volatility, when you see so much of risk, and when you clearly know that that risk may or may not suit you, then the investment actions of each person has to be fine-tuned to who he is. It is this job which an advisor does. I always compare and liken the job of an advisor to that of a doctor. We are also prescriptive in our work. But think about this. When you get a prescription from your doctor, do you go back and fight with him about the prescription? Or do you just throw the prescription away in your drawer? You go straight and follow the prescription. But how many investors are willing to follow the prescription of the advisor? How many people understand that the advisor has actually put in a lot of forethought, effort, and understanding in giving that prescription? That essentially is where we still have a lot of gap and catch up to do. In an environment where the macroeconomics are changing constantly, where industries are going through tremendous churn, we have come to an investment culture where we think making money in equities is a simple thing. It's not. It's a function of time, it's a function of risk, and it's a function of patience. Most people think that they need not wait. They can buy something which will go up immediately, and they can again change into something else which will go up immediately. Effectively, from my experience, when you lower the risk, when you moderate risk, when you align risk with the investor, there is a gestation. You need to have patience and you need to give time. But for the time you give, returns will come. I've seen several instances, like when we invested in pharma funds, when we picked pharma funds as our prescription and our clients invested in them, we found that for a good amount of time they tested us. When I say good amount of time, 2 to 3 years. But in 6 months, all the returns which an investor should have got during that waiting period happened. Similarly, we invested in commodity-oriented funds. Same story. But some funds do take longer because policy changes don't come at the pace at which they need to happen. Bureaucratic delays happen and the theme itself gets extended. In every kind of situation, the advisor and the investor should follow the prescription. You should wait for the results. Because you followed the prescription for a specified period of time and the results are slower than you expected or not as good as you expected, you don't tear up the prescription. Assume that you're extremely unhappy and you don't like the prescription, you go to another doctor and take another fresh prescription. What are the odds that that prescription will take even longer and you need to invest fresh time? Most investors don't think through this. When they get upset with one prescription, they think that the next prescription will automatically work for them. Eventually, investors who keep changing prescriptions only end up richer with the number of prescriptions they have. They don't end up richer with money. So, advisory is a prescriptive business. It's an activity where an advisor gives suggestions to an investor, and the investor understands the competence of the advisor and understands that this prescription is not going to change things immediately. He knows that he needs to follow the prescription for a reasonable period of time and stay disciplined and committed to the ultimate outcome which will happen over time. That has never been easy. The last 1 year has been even more difficult. Investors tend to compare their prescriptions with the prescriptions of others, right? and many of people write their own prescriptions, which is not even written by an expert. I'll give you an example. When we were walking out of pharma funds because we felt the team had played to its potential, the entire market was buying pharma funds. So somebody prescribed pharma funds by us 3 years ago, refused to follow the prescription. He says, let it run, and it's fallen. So these kind of things have no answers, they have no solutions. If the person receiving the advice decides so, so be it. If the person decides to follow the prescription diligently, then he is under the control of good advice. He is under the guided path of good advice. But if a person decides that he wants to be his own person, then he is going to be confused that he chose something which is contrary to advice, and the records are going to speak. While these are all things that are from the past, what's the future holding for advisory? In my opinion, the future is going to be even more tough. It is not going to be easy to make simplistic investment choices and high returns. The two are not going to go together. Many people see the bottom of last year and the present market and think that this is going to repeat. It certainly is not going to repeat. So whatever happened now was more like an aberration. And in my view, a lot of good things that happen in the future are already reflected in the current market, but the market, while remaining at the same levels overall at an aggregate, will still see a lot of opportunity within. And it is necessary for investors to look at asset level diversification and market level diversification to improve their returns, to improve their risk management, and to improve their quality of investing. So advisory needs to transition, and advisory needs to move beyond just a handful of funds or a handful of fund managers or a handful of large cap or multi cap teams. That's not going to work. What will work is a bottom up approach which keeps the changes in the macro in mind, which remembers that there is going to be a weight, which understands the prescription of advice, and where the advisor and the investor are on the same page, understanding that time, patience, and good advice will make their investment journey smoother and more decisive. So that in essence is how advisory will work in the future. Your prescription is uniquely written for you. It's best suited to you. Somebody else's prescription may not suit you. And if you have got a prescription from an advisor, follow it. Thank you for watching this video. Do stay the course with ithought.